बता देना मुझे। Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And it has been a terrific Tuesday for the markets because the BAP of all deals, that's your India-US trade deal, which has been out since last night, and that has definitely rejoiced and made the bulls party in today's trading session. And the levels as of now speak and reflect so well for the Tuesday's market itself. If you look at the Sensex, it's up and soaring by about 2,000 points. Nifty is also up by about 600 points above that 25,700 odd levels. So yes, the bulls are definitely in the party mode and the risk on sentiment is definitely on for the Dalal Street. But yes, apart from that, under the trade deal, we have seen that the tariffs on the India's exports to the US will be cut down to 18% from the current level of 50%. And the deal has boosted the prospects of majority of the export-oriented companies. Textile stocks, shrimp stocks, they have been rejoicing in today's trading session. If you look at Indocount, shares of Indocount, Gokuldas Exports, they have been logged into 20% upper circuit. Not just textile stocks, but of course, if you look at the shrimp stocks also, the likes of Avanti Feeds, Apex Frozen, they've also been, hitting that 20% upper circuit, and throughout the day, they have been sustaining the good momentum. But yes, you name it, pharmas, auto ancillaries, chemicals, all of them are seeing a good buying frenzy today. And we'll decode later with our expert whether the rally has more room to strengthen from here on, definitely for the labor intensive sectors. But yes, now today, despite being an expiry day, India VIX has relatively cooled off. And the risk on sentiment is definitely on. If you look at the India VIX levels, it's down by about 7%. And sectorally, all of the sectoral indices are thumping in the green. You see Bank Nifty index 2.5% gains coming in from there. Nifty IT index with about a percent gains. Nifty metal index with about 3% gains. Despite the tariffs which is going to stay on for the aluminium and steel, the metal stocks have been unperturbed by it. And as a result of which, you can see Nifty metal up by about 3%. Other than that, Nifty Pharma Index also up by about 3%. Nifty Realty has been leading the gains from the sectoral indices, up by about nearly 5% itself. But yes, the broad end of the markets also seems to be doing well. Nifty Mid-Cap Index up by about 3%. Nifty Small Caps also doing well from about 2.5% gains coming in from there itself. But yes, what is doing well on the Mid-Cap basket? If you look at the BSE Mid-Cap basket, the gainers stand like Aarti Industries, with about 14% gains. Balkrishna Industries has also been doing well, 12% gains coming in from this particular counter. Godrej Properties is doing well with about 8.5% gains. Tube Investment is also one of the top gainers on the BSE mid-cap. On the other hand, from the small caps index, also you can see Pokarna, One MobiKwik, Gokuldas Exports, Avalon Tech is soaring in the trade, all of them hitting about 20% upper circuit. Avanti Feeds at about 20% upper circuit. Goldium International at 20% upper circuit. So yes, quite a few gainers that is coming in from the small cap basket, which is why we can see that the Nifty small cap index is up by about 3% itself. From the Nifty 50 losers and the gainers on the large caps front, let's take a quick check of that. You can see advances are at about 49 stocks have advanced. Declines, however, standing at about 2. You can see Tech Mahindra and Nestle Industries has been one of the top Nifty losers at this point of time, and the gainers stand at about Adani Group stocks have been doing quite well. So yes, Adani Enterprises soaring in the trade with about 10% gains. Adani Ports also doing well. Jio Financial, Bajaj Finance, Indigo, some of the other gainers on the Nifty 50, gainers list. But yes, to understand how the last minutes of the trade look like, joining me is the technical expert of the show to decode of what lies of the markets ahead. We have Osho Krishan of Angel One joining us. Osho, I mean, what a terrific Tuesday for the markets, and you can see that Nifty and Sensex remain strong with about 2% gains. So what lies ahead? Can we see Nifty hitting that all-time high levels soon?
Very good afternoon, Lovisha. Firstly, thank you for inviting me at the show. Well, yes, no doubt it has been a very terrific Tuesday because we have seen a very strong gap up opening in the equity market. But to be very honest, the market has been very flat after the opening bell. So there has been very subdued momentum on the higher levels. But definitely the short positions which we have seen, especially from the budget day till yesterday, those has been totally executed, eroded from the market. And I am expecting that from here onwards, the gradual upshift will definitely be there in the benchmark indices. But looking at the technical front, Nifty has made a very strong bearish formation on the candlestick chart. So I'm expecting that this might not be a very easy or very good move that can be expected in the recent period. There might be some kind of challenges even as of now also. But looking at the technical levels, 25,600, which was the resistance previously, now that should be providing very strong cushion to the benchmark index. While on the higher end, I am expecting 25,900 to 26,000 to be seen as the intermediate hurdle in the benchmark index. And once it breaches the zone of 26,000, then from there onwards, the bullish trend can be seen drastically improved. And from there onwards, we can even retest the lifetime high, but that is from a positional point of view.
Okay, that's same coming from the Nifty 50 index. But yes, let's talk about Bank Nifty index also. The index has been showing good moves today, 60 above that 6150 odd levels, and you can see right now the index is above that 60,000 levels. So yes, it's cooled off from the day's high, but still showcasing a gain of about 2%. And stocks which has been contributing the moves, it's your HDFC Bank and ICICI Bank. Osho, what lies ahead from the Bank Nifty index also?
In Bank Nifty, there has been very strong consolidation breakout because looking at the previous setup in this counter, there has been very strong consolidation from the month of December till January. There has been very strong consolidation zone. But looking at the recent development, there is no doubt a very strong consolidation breakout. But again, the view remains same because from the higher levels, we have seen a continued rejection or profit booking from the higher zone. So Bank Nifty still has a positive setup, has a positive biasness, but I'm expecting till the time it won't give a sustained movement above 60,500. Till that time, better to utilize dips as buying opportunity. For now, 59,500 to 59,400 is a very strong support levels, and those levels can be seen as buying opportunity in the banking index. While on the higher end, 60,500 is the immediate hurdle, and once we surpass the immediate hurdle, then from there onwards, the continuity on the higher end will be seen in the banking index.
Okay, all right. But yes, India VIX that has relatively cooled off today, and we have seen that it has been, quite volatile today. What does it indicate, Osho? Despite it being an expiry day, India VIX has seen quite a bit of an ease.
Definitely, today's market is exceptional. It's not that we can see every day such kind of momentum in the market. So, India VIX in the last three sessions has been very volatile in itself. So, I'm expecting with the kind of correction from the higher levels, now the market can see some kind of a stability, and India VIX can even further correct or cool down towards the zone of 12 to 12.5. So, I'm expecting that from here onwards, there is a strong possibility of a stability in the market, and one can look for opportunities on the longer sides.
Okay, all right. Let's talk about sectoral indices, which has been in focus. Then we'll talk about textile sector in first. We've seen Gokuldas Exports, and then the likes of Wellspun Living, KPR Industries, Indocount Industries. All of these stocks have done quite well today. And of course, this is coming on the back of the India-US trade deal announcement. Osho, what's your sense for the textile sector? Definitely Indocount and Gokuldas Exports hitting that 20% upper circuit.
Definitely, there has been a total reversal in the technical setup in these counters, and both the counters, as you mentioned, is at the upper circuit from the initial of the trading session. So definitely, there has been a turnaround, but sustainability and a follow-up buying will be very much to be needed in these kind of market scenarios. If that happens, then from here onwards, we can see a reversal. Basically, in the Indo count and Gokul Das, both the counters have seen a decent momentum. So I'm expecting that if there will be a follow-up traction in these in the whole space, then we can see some kind of a strong buying emergence, and then one can look for even fresh accumulation in the textile industries.
Okay, not just textile, Osho, but of course, shrimp stocks are also seeing quite a bit of a buying frenzy. Avanti Frozen, Avanti Feeds, Apex Frozen, all of these stocks have been doing quite well, and most of them are at their upper circuit levels. What lies ahead? Can we expect this kind of an outperformance going ahead?
See, these today's movement is basically a sentimental movement. So I'm expecting that looking at today's movement, one should not have a FOMO kind of a situation in the market. But overall, some of the structure, some of the counters, the technical structure remains robust. For Apex Frozen, the technical structure is very positive, and I'm expecting that if it breaches the zone of 350 on a decisive manner, no doubt it is at a higher zone. But sustainability above 350 is very important for the counter. If it happens, then in the coming period, we can see continuation on the higher end. So overall, the technical structure is positive, but one should not be very much aggressive in accumulating positions in such counters, specifically after the rally that we have seen in today's trading session. But from a longer or medium term perspective, definitely the chart structure is very positive.
Okay, all right. Longer term perspective is something that is quite positive for all of these counters. But is shifting gears from there to Adani Group companies, they are doing quite well today. Osho, Adani Green, Adani Ports, Enterprises, all of them quite, topping one of the top Nifty 50 gainers list. So, what lies ahead in terms of the near term levels?
Well, in whole Adani Group companies, there has been some momentum in the past 2 weeks. Majority of the counters have seen some kind of a strong traction from the lower end only, but with today's movement, majority of the counter have started gaining strong traction. For Adani Ports, I'm expecting that it is on the verge of giving a breakout. The zone of 1530, 1540 is a very strong resistance level, and if there will be a follow-up buying from these levels, then we can see very strong momentum in the coming period. So there has been a V-shaped recovery, and I'm expecting that from a positional point of view, one can look for buying opportunity in the whole Adani Group companies from shorter term perspective.
Okay, all right. That's the take coming in from the Adani Group companies. Definitely, they've been doing well on the back of the news flow as well, and of course, the broad-based buying that we are seeing in the markets. But yes, apart from that, the auto ancillaries have also been doing well on the back of the trade deal announcement. Bharat Forge, Sona BLW, they are seeing good set of gains, given that they have a significant exposure to the US markets, and as a result of which, all of these counters have been doing well. Osho, anything from the auto anch space that you're liking? Of course, today's moves can be attributed to the US trade deal, but from a near-term chart perspective, what are you liking?
Sona BLW was into my radar from past three trading sessions. The major reason was we have seen a very strong reversal from the lower end, and in the short term perspective, there was higher low formation on the technical front. So Sona BLW was into the radar list, but with today's gap up momentum and a strong breakout from the consolidation zone, I'm expecting that from here onwards, the counter can see strong reversal and bullish momentum should be continued in the counter. But again, one should wait for some kind of cool off towards the zone of 510, 515. That will be an apt zone to start accumulating the counter. While on the higher end, the first hurdle is near about the zone of 545 to 550. And once it surpasses the zone of 550, then we can see a decisive movement towards 650 to 670 from a short to medium term perspective. So one should definitely keep this counter in the watch list. Any dip should be utilized to accumulate positions.
Okay, all right. Any dip can be utilized to accumulate positions. That's what we'll be keeping an eye out for. But then let's talk about Bharti Airtel, because the company is due to report its results this week. Right now, the stock is seeing a gain of about 1.5%, and brokerages are broadly expecting that the earnings momentum is expected to remain intact, even as they remain divided on the margin expansion and profitability from the African business. But yes, Osho, Bharti Airtel today doing well, but in the past month, we've seen that the stock has entered a bit of a consolidation phase. Do you expect the sideways trend to continue?
Overall, technically, the counter is still into a sideways to negative bias kind of a zone. But I'm expecting that if it breaches the zone of 2040 or 2050 on a decisive manner, then from there onwards, we can see some kind of positive traction in the market. Overall, because there has been a double top breakdown, which was seen in the month of January in this counter. So I'm expecting that that will be a very strong resistance level. So 2050, if only breach in the counter, then one can look for buying opportunity. Else, the strong support is lying around the zone of 1940 to 1930. So any dip towards the zone of 1930 can be seen again as a buying opportunity with 2050 as a short-term target.
Okay, got it. That's the view for Bharti Airtel. That is something that we need to eye out for. 1940 is the next support zone that we can watch out for, the telecom operator. But yes, let's talk about one of the stock in focus. The stock is seeing a little bit of a sharp breakdown after its fourth quarter results, given that the company follows a calendar of that particular year. That's your Varun Beverages. Right now, the stock is down by about 2%. And if you look at from its Q4 numbers, the net profit has been at about 260 crore rupees. It's seeing a slight bump up from the last year. Total income has also grown by about 15%. But yes, the profit and revenue numbers, they have been, below what the street has been estimating. And that's the result of which why the stock has been seeing a sharp breakdown today. Osho, what's your expectations for our Varun Beverages? The stock is definitely reacting not well to its, fourth quarter results.
Well, there has been continuous rejection from the 200-day exponential moving average in VBL. So I am expecting that until it has a very strong sustained momentum above the 200-day EMA, which is nearly around the zone of 490 to 500, till that time better to stay sidelines, because majority of the times we have seen a decent movement from the lower end, which is approximately around the same levels, 420 to 430, towards 500 kind of a zone, and from there onwards we have seen multiple rejections. So I'm expecting that if from a longer term perspective, if one has to accumulate, then better to wait for a sustainable move beyond the zone of 500, 510. If from a short term perspective, one needs to have a review, then once the counter stabilizes in today's trading session, tomorrow can be seen as an opportunity to accumulate it from a short term perspective. 420, 430 is a strong support levels. If it goes towards the zone of 420, then one can try to accumulate and exit around the zone of 480.
Okay, all right. That's the view coming in for Varun Beverages. But yes, let's shift gears and talk about chemical stocks today on the back of the trade deal announcement. You can see PI Industries doing well. Fine Organics seeing a gain of about 6% itself. And of course, all of these chemical companies have been doing quite well today, given that they have significant exposure to the US markets. Osho, for you on the charts and then of course on the technical levels, how do these chemical companies pan out for you?
See, firstly, there is a initial signal of reversal in majority of the chemical space. So I will be waiting for one more sustainable movement in some of the counters. If it happens, then only can be seen as buying opportunity, because from the lows, the counter have seen a very strong gap up opening, but from those levels, there has been continuous rejections that has been seen throughout the day. So that means people are not very much appreciating the current levels to start accumulating. So better to wait for another follow-up buying traction or buying emergence in these counters. If it happens, then only look for buying opportunity. Else, better to stay sidelines from chemical space for the time being.
Okay, got it, got it. All right, that's the view. PI Industries definitely with about 2.5% gains coming in. But yes, let's talk about KEC International. The stock has been marginally down at this point of time. It's at the day's low level, despite the company receiving which was new orders, which was worth about 1,000 crore rupees. At this point of time, it's the stock is flat, trying to attempt a recovery at this point of time. But yes, the stock has been spiraling downwards in the past 1 month itself, 16% down in the 1 month report. But yes, Osho, for you, KEC International, can we expect the stock to further fall ahead? Because today also, despite the markets remaining euphoric, the stock has been flat.
The overall this counter has been into a very strong correction zone from the higher levels of nearly 900, and towards now it has came down to the historical support of 600. So I am expecting at current levels it will be like catching a falling knife, which is not advisable on the technical aspect. So better to avoid the counter. If there will be a sustained movement beyond the zone of 700, which is the 50-day exponential moving average, then only it will be advisable to start accumulating with a short-term target of nearly 850. For at current levels, it's better to avoid the counter.
All right, better to avoid KEC International. But yes, let's move on and talk about Solar Industries. It has come out with its Q3 results, and as a result of which we can see the stock is reacting quite well. Profit has surged by about 42% on a year-on-year basis. If you look at EBITDA on an operating level, also has increased by about 34% on a year-on-year basis. Margins have also largely remained stable at about 28% in the third quarter, and as a result of which the stock is reacting well. You can see a sharp breakout on the charts itself. Osho, for you, Solar Industries on a near-term levels, can we expect the gains to sustain?
There has been some positive traction and developments also on the technical front. There has been positive crossover between the EMA, so I'm expecting the momentum should continue in the counter. Although on the higher end, 14,200 is a very strong resistance level. So for those who still want to accumulate the counter, better to wait for 14,200 to get surpassed. If it happens, then try accumulating the counter. Then from there onwards, one can expect a decent rally towards 15,000, 15,700 from a positional point of view. But at current levels, if someone is already holding position, it will be advisable to hold it with a stop loss of 13,200 from short to medium term perspective.
Okay, all right. That's the view coming in for solar industries. But let's talk about Avalon Technologies. The stock has clearly, hit a 20% upper circuit, and the stock has gained in 4 of the last 5 trading sessions. And of course, the stock has been reacting well to the US-India trade deal, given that the company derives about 60% of its overall top line from the US markets itself. Osho, how does the stock look like? Because after 800 to 900 odd levels, the stock is clearly above that 1,000.
Definitely looking at the technical levels or technical developments, there has been a very positive traction, but again, the counter is at higher circuit. So I'm expecting that if there will be a sustained move beyond the zone of 1000 or a continuation beyond the zone of 1000, then one can look for accumulating this counter because there has been decent correction from the levels of 1300 and the counter have already tested the previous consolidation zone of 800. So there was a kind of a overheated parameters have already cooling down and the technical parameters have corrected towards the oversold share range. And from here onwards, if we are expecting a bounce, then one can look for accumulating above the zone of sustainable gains of 1000 towards the higher levels of 1200 in a short term perspective.
All right, that's the view for this particular stock. But yes, just less than 10 seconds to go before the market closes. But let's talk about Indoco Remedies. The company has come out with its Q3 results and the stock has been reacting quite well. 10% gains coming in for the counter, despite the net loss which has widened from last year. But what the street has been reacting well to is the margin expansion for this particular counter. But we'll get back to that stock, but let's address the last rates on your screen. Nifty 50 closing well ahead and with about 2.5% gains above that 25,700 mark, and it is well set to march above that 26,000 levels. That's the cue that we'll be watching out for. But right now it's seeing a gain of about 600 points. Sensex also rallying quite well with about 2,000 points gain coming in from there. So yes, in the opening we did see that the market cap had added about 20 lakh crore rupees. Right now it's about 12 lakh crore rupees. But yes, the markets have been resilient quite throughout the day. Despite Tuesday being an expiry day, the Nifty has sustained its momentum consistently for the better part of the day. But yes, from a sectoral perspective, all of the sectoral indices have been trading in the green. You name it, it's your banks, Nifty, auto, pharma or realty, all of them have been soaring in the, in the sea of green. But yes, India VIX has relatively cooled off, 7% downtick coming in from there. Broader end of the markets continue to remain resilient. Nifty mid-cap and small caps continue to see 2% gains. And let's take a look at how this Nifty gainers and losers have panned out on the large caps front. If you look at if you look at the gainers, of course, the Adani group companies have been doing quite well today. So yes, 46 stocks have advanced on the Nifty 50 front, while 4 have declined. On the on the gainers list, like I was talking, apart from the Adani group companies, it is your Jio Financial which has done quite well. Bajaj Finance also soaring in the trade with about 6% gains. Indigo with about 5% gains. Max Health, Power Grid, Sun Pharma, and then you can have Bajaj Finserv. So all the Bajaj twin companies have been doing quite well in today's trading session. But yes, on the flip side, it's the 4 stocks which has declined on the Nifty 50. It's your Tech Mahindra, which is seeing a cut of about 0.5%. Bharat Electronics with about 0.1% decline. SBI Life and Nestle Industries, both of them seeing a marginally lower decline with about flat, but with a negative bias, so to say. But yes, let's go back to Osho on Indoco Remedies. The stock has been, quite resilient despite the net loss widening in the third quarter. It's the margin expansion is what kept the street sentiment quite active on the particular counter. But yes, Osho, for Indoco Remedies, what does the near-term chart indicate?
Technically, the counter is still into a downtrend, so I will be waiting for a sustained movement beyond the zone of 270. If it happens, then only one can look for buying opportunity because there has been consistent selling pressure in the counter in the last 2 months. So I'm expecting that if there will be a reversal above the zone of 265 to 270, then only there can be a chances of a double bottom formation. But again, 225 should be strict stop loss in the counter. and one can look for some kind of opportunity in the short-term perspective.
Okay, all right. That's the view coming in for Indoco. But yes, Osho, just one last question. Of course, list out your top picks after the India-US trade deal, and of course, now that the budget is also over.
See, there are many counters which are looking very positive today because of the market sentiments and the kind of formation that they have been into. But looking at the recent counters which have seen some kind of consolidation or breakout, so I will be focusing more on those counters so that the breakout should be reliable. The first counter which is looking very positive is Riders Life. This counter have seen a double bottom breakout in today's trading session, and I'm expecting that in the short term perspective there is a strong possibility of it retesting the zone of 940. So one can look to accumulate around the zone of 900, keeping a stop loss of 880, which is the bullish gap that we have seen in today's trading session, for a higher target of 940. And the other counter which is looking very positive is CCL product. This counter have also seen decent traction in the recent period. There have been multiple positive crossovers in the EMAs and the 14-day RSI also. So I'm expecting that once it breaches the zone of 980 on a decisive manner, then it can even surge towards the zone of 1040. While on the lower end, it is advisable to trail stop loss or keep a stop loss around the zone of 970.
Okay, all right. Those are the stocks that we need to watch out for. But yes, with that, we have to let you go, Osho. Thank you for your time and joining us.
Thank you so much.
All right, clearly the day of winners for the markets, given that you can see that the markets have closed firmly in the green. Nifty has closed above that 25,700 odd levels. It's marching and, it sets the tone way ahead for 26,000 levels as of now. But yes, the advanced decline ratio, that remains positively in the green. 3:1, that's the advanced decline ratio for you. And of course, from the Sensex point of view also, we have marched ahead to about 2,000 points. But yes, several of the brokerages have been reacting after the, US-India trade deal now that it's done. Jefferies has clearly laid out its portfolio changes for its model portfolio. What they believe that is that the latest agreement brings effective tariffs down by about 1 to 2 percentage points, lower than that of competitors, that's your of Pakistan and Vietnam. And particularly, it's favorable for the labor sensitive sectors, that's your textiles, gems and jewelries, and of course the shrimp companies also, which is why we saw a majority of the stocks have been rallying well ahead today. And of course, majority of them have been hitting that 20% upper circuit. But yes, with the Jefferies, also expect sectors such as auto ancillaries, solar manufacturing, chemicals, Adani group companies to be key beneficiaries of the deal. And in their model portfolio, they have added Eternal as an FPI favorite, and they have increased exposure to the metal stocks also. And in their model portfolio, they have trimmed some exposure to the IT companies. They have pointed out concerns around the lack of AI-led growth opportunities, a weak rupee, and the absence of a trade deal with the US, which heavily weighed on the investor sentiment, and which is why they have been a little underweight on the IT stocks itself. But yes, in the last 16 months, we have seen that the FPIs have pulled out $34 billion from the Indian markets, and whether this US trade deal is something that is going to reignite flows back into the Indian markets is something that we'll be watching out for. But yes, you can see that the rupee has settled well with about 19.14 against the US dollar, and whether or not the rupee continues to strengthen from here on is something that we'll be watching out for as well. But yes, apart from that, majority of the brokerages have been, quite positive on the counter. And yes, we'll be watching out how the, markets perform in the days to come as well. But yes, to talk more about markets and what the way ahead is, let's quickly move on to our next guest of the show. Joining me is Sandeep Bagla of Trust Mutual Fund. Sandeep, good afternoon. Great day for the markets, and Nifty has seen one of the biggest single day rises in the last couple of years. So finally, now that the overhang is done, can we say that we can see a good run up ahead? What's your advice?
Yeah, I think volatility will be there in the markets, both because of global and local factors. But this is something which the market was looking forward to, and people had sort of, given up hope that for the next 3 to 6 months this might take for the deal to fructify. So this announcement is, I think, more than just welcome. And in the process of negotiating this deal, we have also come closer to a deal with the European Union. So, in troubled times, there are more reforms. and I think that has proven true this time also. So additionally, I think we have got the benefit of more favorable transactions from the EU also. So I am quite hopeful that this will boost sentiment also, this will boost the rupee also, and this will provide some further tailwinds to the market which were missing till this time.
Okay, got it. Sandeep, but the labor intensive sectors, for instance, your textile, shrimp stocks, they've all hit 20% upper circuit as of at this point of time. Do you think that this rally is sustainable going ahead from a fundamental perspective, and would you advise investors to relook at them?
See, I think what happens is if the tailwinds are behind you and if the policy is in your favor, then people have more patience to hold on. And even at higher PE, if you have greater visibility, people are okay to hold on to stocks. So while the current price rally may or may not sustain, but I think it definitely gives investors to hold on to for a longer period of time. And if the earnings were to revive in the next couple of quarters, I think the prices would sustain as well.
Okay, okay. But what does
Of
it
course,
mean
this is meant for, of course, this is meant more from an institutional investor framework. Individuals are not expected to, really trade in the markets actively, but, give money to us fund managers to manage more responsibility and more responsibly and more actively.
Got it, got it. But everyone has been saying that the FIs would come back with the kind of, the US trade deal now that it's done deal, and we also have the uncertainty of budget also out. What's your thoughts in terms of the capital flows when it comes to the Indian markets?
See, I really hope that, FIIs come back and, probably in the short term, there would be a short covering. But for sustainable flows, I think India has to become slightly cheaper, either in terms of currency or in terms of equity valuations, because most of the incremental investments are coming in emerging markets, which are probably more AI driven in terms of hardware or software. But in the past, even the other EMs have got money and India has not. So hopefully India will also get some money. But I think the valuations would probably have to come down a bit more for FIs to come on a sustainable and on a larger basis. So I would wait for some more data to emerge. Today, I think, of course, I think FPI data should be positive, but I don't think that this is sufficient for FPIs to turn beyond the short covering.
Okay, okay. But the tariffs on steel and aluminium continue, Sandeep. Would you advise investors to warrant some caution given the kind of rise that we're seeing in the Nifty Metal Index?
See, I think the metals have seen some kind of a sharp correction. And one important factor in my mind is the announcement that the US Fed will have Kevin Walsh as the next US Fed governor, the chairman of the governors. And I think he's a person who's basically not very in favor of balance sheet expansion. And he's a bit of an inflation hawk also. So I think under that, there could be expectations that dollar will become somewhat stronger. So that could provide some kind of headwind for the metals in the short run. Over a medium term, I think metals should do well because I think inflation is a worry on a global platform. And in the global scenario, I think inflation can go up. So I think one should be cautious on metals, but I think long-term bullishness could persist.
Okay, okay, got it. But Sandeep, any sectors that you're turning positive on now that the overhang of the trade deal is out now?
So we are fairly bullish or constructive, I would say, on financials and on banks, NBFCs, and capital markets. Then we are getting constructive on autos, which includes passenger vehicles and CVs, and of course auto anchors also. Uh, we have added to export-oriented companies in the last few days in our portfolio. So incrementally, yes, the markets would probably uh, be beneficial for companies which are linked directly to exports. But we are more domestically focused. We believe the Indian growth story will continue for a long time to come. So we are likely to have more stocks in our portfolio which are domestically focused. So I think we are likely to benefit from the improvement in sentiment rather than just the benefit from accruing from the trade deal.
Okay, got it. Sandeep, let's circle back to the defense counters because they did see quite a bit of an increase in allocation during the budget. But with the kind of valuations they have been trading and execution still remaining a key overhang, do you still find it attractive from a growth story perspective?
So defense we feel is that it's a multi-decadal opportunity and the growth will continue as India transitions from a complete defense importer to probably a net exporter over the next decade. But valuations are steep and earnings will come are lumpy and are likely to happen over a period of time. See, defense is a more risky sector, especially for the retail investor. We have some allocation to selective stocks, and we probably will have them for a long period of time. So we are bullish on defense, but one has to be patient. And as you rightly pointed out, valuations are challenging.
Okay, got it, got it. What about the gold and silver prices? I mean, they have remained quite a bit turbulent. Today, we have seen a little bit of a retreat in both of these bullions, and as a result of which ETFs have also rebounded. But what is the kind of sentiment are you assessing here? And if there is an investor who wants to relook at it, what would your advice be here?
See, my perspective on this is that investors should not try to participate in everything which moves fast. I think there is merit in committing 10 to 15% to gold and silver, mostly gold and less silver, which is more speculative in a portfolio. There are a lot of speculative elements which are going on. There are a lot of technical factors which are governing the markets, leading to wild volatility. So I think one should not really try to look at it from a daily perspective and try to trade on it. I think on a trend basis, gold and silver will do well. However, if the dollar were to strengthen in the interim, there could be corrections. I think there'll be wild swings. So I think one should definitely put some allocation depending on the risk appetite, but one should not try to chase any market correction or chase any rally and trade in a big way.
Okay, Sandeep, what about the small caps? I mean, you can see majority of the stocks, be it your textiles or the shrimp companies, they fall into the small cap category. Now that the trade deal overhang is out, would you say that the fraudiness in the small cap segment has, definitely turned a little bit more attractive at this point of time? And would the investors actually care to relook at it despite, the kind of outperformance that we're seeing in the large caps?
So at Trust Mutual Fund, we are getting identified as a house which tends to believe in the long-term sustainability of small caps. See, small caps are, there are more than 1,000 companies probably which are more than 2,000 crores in market cap. So small caps forms a very large universe of 700, 800 investable companies. And we feel that the earning growth in select small caps will be much higher than even mid caps and definitely more than large caps in the next couple of years. And the mid caps of tomorrow will come probably from the small caps only. So I think there is a lot of opportunity, but it's a treacherous terrain out there. Small caps tend to go down also very severely when there is a disappointment in earnings. There are governance issues also. So I would say that the better way to play the small cap over a long period of time is to invest in a fund which has specialized fund managers. I think the next 5, 10 years, small caps will outperform and outperform handsomely. But it has to be done under expert supervision. And one should not try to, play large stakes on individual basis on small caps. So I think a diversified portfolio with small weightages in small cap portfolio will do you well.
Okay, got it. Sandeep, what about the rupee? I mean, today clearly we are saying that the local currency has appreciated by 1%, closed at about 90.1 against the US dollar. Do you think this kind of move is sustainable going ahead from the currency point of view?
See, I think the Indian currency has done exceptionally poorly against the dollar and against other currencies. So I think probably would be reasonable to say that we should not see too much depreciation during the year. But it is only February, so there's a lot of time till the end of the year, and I think the volatility will be there. But I don't see any great amount of depreciation this year, beyond what we have already seen in January.
Okay, got it. But yes, I mean, Sandeep, during the budget, the STT hike on the FNO definitely spooked the market sentiment. But today we're seeing a bit of revival on the back of the trade deal. But the sentiment has been that it could squeeze in the liquidity and in the derivatives market. What's your assessment here in terms of the hike in the derivatives market?
So I think the hike has in STT has been undertaken with the objective that one should try to curb the speculation in futures and options market, especially from the retail. It can lead to marginal reduction in liquidity, but I think there has been a concern that retail investors are indulging in too much speculation, and of course there has been cases like Jane Street where there has been systemic large amount of trades. So I think this has been done to reduce speculation. I think time will tell. I don't think the liquidity will come down to that extent, and probably speculation will be curbed to some extent.
But what does it mean for high frequency traders who have been, using the algorithms to trade day in, day out? What does this tax increase mean for them? Do you expect a transition to low frequency?
Frankly, you know, we are long-term investors. We want to gain from the India growth story. People have tried to use stock markets for their gains by doing high frequency trading. But in the bigger scheme of things, I don't think it really matters.
Okay, got it. Sandeep, now that the trade deal is announced and we even have the budget and the Q3 results are also, already almost towards the last leg, what is the next trigger that you're watching out for?
See, I think the trigger, I think, would be the global markets. I think we are seeing green shoots. I think we are seeing green shoots even in the CV cycle, which is an indicator of the overall health of the economy in the next few quarters. So I am more optimistic than earlier. I was a little concerned earlier about the trade deal and about the slowing growth in Indian economy and the higher valuations. I think all those factors are much better off in terms of an investor making fresh investments. I think 2026 should be seen as a year to make investments. It will give you very good opportunities to invest, and one possible opportunity was, a couple of days back. I think this is not the year to really, count your returns. I still think the returns are going to be fairly reasonable this year. But I think I'm far more optimistic on India's future going forward after the budget and after the trade deal.
Okay, any targets on the Nifty 50 that you're penciling in at this point of time?
No, absolutely not.
Okay, got it. Sandeep, also we'll be having RBI, which will be meeting this week itself for its MPC announcement. What is the kind of announcement that you're expecting? Is there going to be a rate cut or not? Which campaign are you leaning towards?
No, I think there's no chance of any rate cut or any kind of cuts right now. I think the MPC members will have a lot to chew on in terms of the developments in the past few days and the volatilities. I think one thing that requires immediate attention is the high short-end rates. The largest bank in India was borrowing at 1 year money at 620 a few months back. They are now raising money at 7+ levels. So in spite of rate cuts, the bank borrowing costs have actually gone up substantially. And I think that is concerning because that means that not only the transmission is not happening, but it's actually the rates are moving the other way around. And it will not only lead to compression in banks' earnings, but it has more implications on the liquidity framework and also the inflationary expectations of India. So I think one needs some clarification from RBI as to why their policies are not really working in the real world. And I think the economy and the market participants should have an explanation from RBI as to what is their thought process going forward.
Got it, got it. All right, so Sandeep, on that note, we have to let you go. But thank you so much for your time and joining us.
Thank you, Lovisha. Bye bye.
All right, definitely it's a great day for the markets and what the experts have been echoing so far as well. And we could see whether or not Nifty would march onto that 26,000 levels. But yes, on a separate note, let's listen into this conversation from Radhika Gupta, who's the MD and CEO of Edelweiss Mutual Fund, who spoke about why asset allocation is quite necessary at a time when investors are chasing the FOMO of precious metals. Listen in.
I love to see the transaction report in AMC, and I have seen people switching out in the month of January from small caps and mid caps to pure silver. And I don't think there's a problem in holding either gold or there's a problem in holding mid caps. The problem is that you shouldn't forget asset allocation and you shouldn't take actions out of FOMO, positive or negative. I tweeted this last night, and I really believe that. I think the problem would be that the last month has seen such wild swings across asset classes, and then investors, we feel compelled to react to those swings, whether it's an up movement in bond yields, whether it's a 30% movement in silver. So I think my push to investors is to take less action, because honestly, one could neither forecast STT on Sunday, nor could one forecast that two national leaders would put out a trade deal on a Monday night after the budget. So neither is forecastable, and equity returns are also lumpy. So if markets are up 15-20% a year, it doesn't come on every day. You miss a couple of big days, and that is also very, very significant. So I think timing is a very, very hard thing to do. We don't hold cash in our equity funds for this reason, because we know trying to time this is so difficult.
That we have seen in the gold and silver prices today after it fell for the 4 straight days as of now. But yes, with that, we've come to an end of this edition of Closing Bell. We will be watching out whether or not this strong rally that we have seen from the bulls today can sustain in the days to come. We'll be also getting you some of the Q3 results, stock-specific action, which will be continuing, and of course, the RBI policy update, which will be later in this week. But yes, for now, it's a wrap from me, signing off, but do stay tuned to Money Control.